There's a very interesting pattern in the Polish stock market. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Let's first look a bit at what's happening here with the sectors. So we can see here that the top performing sector is energy, and the worst performing as far as the low goes is utilities. In this video, we will specifically look here at Eastern Europe. So Poland, it has a bit of a lackluster performance here from the low. Seen a little bit of a pullback, but nothing like really dramatic happening in that country. So if we go here and look at the charts, what I found very interesting, okay, so these are weekly data points, definitively talking about the big picture. And EPOL is the ticker. We have these huge time cycles that you see that during this rising phase, the high of the rising phase, it came almost towards the middle here. You get the low, so I think you can see yourself that there is a pretty clear relationship here with the time cycles and price. Within the time cycles, the major time cycle, we tend to have three smaller. The interesting thing, of course, right here and right now is that we are still part of this major rising phase. When we compare the time cycles with the seasonality of Poland, we see here that April, the previous month, it literally is the strongest month. And we did see, strength here in April. May and June are some of the weakest months. And when we look here at the time cycles, the small time cycle, there is reason to expect a bit of a, this is part of the declining phase of the time cycle. So there is a fit here between seasonality and the time cycle. The thing is that given that we are also part of this major rising phase, the magnetic force of the major phase is going to be stronger than the smaller declining phase. So even though there's probably going to be some pullback in line with seasonality, if you look here at the previous major time cycles, like here you did have during this small time cycle, you did have a meaningful pullback. So here you have this very clear match between the small and the major time cycles. But if you look at this instance, we did actually have, some deterioration during the declining phase, but the magnetic force of the major rising phase was so strong that the pullback became more shallow. So basically the question is that, yes, we do expect a pullback, but will it be more like this time cycle here, the major one, or this major time cycle? So let's here zoom in a bit. So when we look here at the RSI, the PPO, there's no alarm signals. One of the issues I do see here is the AD. So this is accumulation distribution in blue, and that shows us whether there's an inflow of buyers or sellers. And we see that the buyers, they are very timid. So there is definitively some issues here when it comes to the money flow. So let's go here to the daily data points like that. So here on the daily data points, we do actually have a very interesting technical pattern that can become, rather bullish. That is this inverse head and shoulders pattern. That is a bullish technical pattern. The way this pattern has developed is also rather healthy because, as you can see here, during the formation here of the left and the right shoulder, and also actually the head, you see that we used moving averages to form the left shoulder. And you see here that the bottom of the head was formed with the 200-day moving average in red. And here you see that the blue 100-day moving average helped form the right shoulder. So this is it's a very nice pattern because you do have the inverse head and shoulders pattern. But beyond that, it was formed through moving averages, which strengthens it. It increases the probability that it will work. When we look at some other indicators, the recent pullback, it was expected in the sense that you did have this double top pattern, and you also had a double topping pattern here on the RSI. So here you can see it very clearly. So yeah, that was to be expected, but it's not really that dramatic, because we do have a bunch of support levels below us, and frankly, the seasonality for the coming months, it is expected to be a bit weaker. But yeah, let's explore further. So we go here to Finviz. They draw a bunch of trend lines. Nothing really interesting happening right here with the trend lines. These trend lines are drawn automatically by their computer system. Sometimes there are some interesting lines, but other times it doesn't make a whole lot of sense. Anyway, here you can see the performance. So year to date, 6%. What I do find interesting is to compare with a key country, and that would be the S&P 500. So when we compare, USA essentially with Poland, we do see some significant outperformance here from the S&P 500. That is not really a huge surprise. So here you can see the chart. So Poland here in green and the S&P 500 here in orange. If you look here at the sector breakdown, so you can see that financials, they take the first place here in Poland, and actually in a very big way. So 33% is actually financials. There are some people who are not going to be a huge fan of that. I do see the point in being concerned about financials, having such a major impact on the performance of the market. Then you have cyclicals. Energy is much bigger here, 13% in Poland, but just 3% in USA. Then you have basic materials. The thing is that, given that we are seeing this narrative of the super, commodity cycle, having energy and basic materials this high up on the list is actually, it could be, interesting. When we look at the valuation, big difference is price book. So price book is 4.39 in America and just 1.909 in Poland. And the lower number is better. So there's definitely substantially more, price to book value here in Poland than the S&P. The yield, 1.38%, is slightly bigger than what you have in USA. So that's more towards the bullish end of the spectrum, in the sense that the major mutual funds and other, big players in the market, they could definitely decide to sell some of their positions in America and buy some value in other countries where the market is more reasonably priced. So I think that the interesting thing here we do have is certainly the time cycles, the valuations, and also the technical indicators we found. There shouldn't be a huge shock if we do see some weakness in the coming months. That is expected due to the seasonality, due to the time cycle, and also we did have some excess on the technical indicators, on the daily data points relating to the formation of the inverse head and shoulders pattern. But looking longer term, there could be some interesting opportunities here in Poland, especially after a pullback, because we are part of this major rising time cycle. The previous major rising time cycles here, it came towards the middle, and the middle here of the time cycle is around April 2022.